Welcome back, everyone. This is Thomas Triple T Ty with another new bullish crypto analysis. Before we dig in, remember this is for edutainment only and not to be considered as financial advice. And with that, remember, feel free to smash the like, ring my bell, hit subscribe if you haven't, and also share your thoughts and share my analysis for your friends and family. And check out this new background for the Bitcoin videos. That's a solar eclipse with the Bitcoin logo on it. Let me know what you think. All right, let's dig into the news first, and we'll dive into the daily chart for Bitcoin. Let me get my mouse pointer on. All right, Bitcoin has been chopping, and guess who bought another 2,500 BTC? It is no other than Luna Foundation Card. All right, so that's cool. And they are at a level almost matching Tesla. I'm sure they'll surpass them soon. A Bitcoin bearish signal is showing potential more downward pull for Bitcoin, and that is the leverage ratio. And I'll show you. Let me see here. Actually, you know what? Actually, before we go there, I want to show you a couple things first. Let's look at market cap. Sorry, I'm out of order here. Market cap is 1.91 trillion, up 2.51 from yesterday. So that's cool. Most of the crypto market right now is in the I'll show you. It's in the greens right now, green right now. So that's really cool. Here, let's zoom out. Oh, zoom in. I mean, so looking good still. This chart is current. It was mostly green this morning as well, almost all green. So it's looking still really good. So that's where we're at. And this is the chart I want to show you. And this is from Coin Signal 365 on Twitter. This article was published on bitcoinist.com. And basically what this leverage ratio is you take the open interest on futures and like perpetual futures, and you divide it by the this blue thing here, reserve. So you take open interest on futures, perpetual futures, and you divide it by the amount of coins on in the wallets on exchanges. And when this ratio is high, like it is right now, like it's like really high, what that's saying is that there's more people using leverage, and what that and also, so if the denominator is skyrocketing and the denominator, if the numerator on top is going bigger and the denominator is not, the ratio is still going to be bigger. But if the denominator is going big and if the numerator, the top number, is going big and the bottom number is shrinking, like it did is doing in this current situation, this blue line right here, that's the reserve on all exchanges. So if this number is dropping and leverage is increasing, so you get the top number going up and the bottom number going down, that just increases the ratio even more. That's what's happening. And so, I should share this chart, huh? Sorry about that. Let me magnify it up too. Let me see if we can get this up for you. There you go. Oh, that might be too big. Okay. So you can see here, sorry. You can see here that it's this ratio, this orange line here, it's really high. And let's take a look in the past, what happens when it hits its top mark. Here it's rising, top mark, and guess what happened? Price, the white line's the price, Bitcoin price dropped. here, and then the ratio dropped again, and then it rose to its another high point. Guess what Bitcoin did? Drops. And so here it's rising significantly, and Bitcoin's right here. So based on the previous times, more than likely Bitcoin could have a major drop soon. And that's what this chart is saying. However, keep in mind that leverage can go both ways. It can be leveraged long, and it can be leveraged shorts. There's no indication of which way it's leaning. But in the past, it's been dropping when this ratio is high. Price drops when this ratio is high. So I hope that made sense. But there's so many different charts that show different things. So it's good to get an idea about what is happening overall. All right. Let's swing back to the awesome background here. All right, next one. Let's take a look at... Let me close this guy. Next one. This next one is another... I'm high on sleep. So I'm going to show you, I'm going to walk you through a few... I mentioned in the past that I would... that's not what I want. Oh, wrong keystrokes. I mentioned in the past that I would walk you through a few like on-chain charts during the weekly analysis, but whatever. This is the daily analysis, but I want you to show you something that's interesting. So we're gonna look at address supplies. Okay, we're gonna start off with supplies held with addresses more. What's that one? Oh, weird. It just changed to T3. Oh, bummer. Maybe I should maybe do this one. Oh no. Yeah, here we go. Let's do this. I have T2 access still. I don't have T3. That's like $800 some per month. Okay. So here, these are wallet addresses with 10K, 10,000 Bitcoins or more. So these are whales. Notice that it dropped. Okay. And so whenever this thing drops, Bitcoin's price tends to drop too. So here is at its high point, and then it dropped. Guess what happened? Price dropped. And so this is so something to keep in mind. So if the whales are selling, then price could drop. But let's look at some more. Let's look at some other. This one is wallet addresses with 1,000 or more Bitcoins, and that's the orange line here. Notice this, it dropped previously, but then it's going slightly sideways, but slightly up. So let's look at addresses with 100 Bitcoin or more. That's dropping slightly. Okay, when it's dropping, that means that they're redistributing it into the market. So they're selling it. Here is address wallets with 10 or more Bitcoins. You can see that it's trending up. Here is addresses with 1 or more Bitcoin, and that's also continuing to trend up, but currently going somewhat sideways, slightly up. Addresses with 0.1 Bitcoin or more, just shooting up. And addresses with 0.01 or more, again, this is also shooting up. What this is saying is that the whales they're the one with the large amount of Bitcoins. They're selling, and the smaller addresses are accumulating. So I'll give you some context. All right, back to the amazing background. I worked hard on that one. That's why that's why this video is slightly late. All right. I'm so curious about El Salvador's experiment with Bitcoin, and 60 minutes, 60 minute the show, the news show, recently did uh, a video about their experience in El Salvador, and just checking out how merchants are using Bitcoin, etc. And an article was posted on Axios, and I'll give you some of the highlights. So Bitcoin was rolled out. Now they have Lightning Network over there, and they also have what is Strike over there. And Strike is like the equivalent of Western Union, but just more modern, less fees, etc. So, what's working over there? There's a place called Bitcoin Beach. I need to say Bitcoin Beach. So over there, Bitcoin's pretty popular, and a lot of the merchants are taking to the payment network and using Bitcoin, etc. However, they found that Bitcoin's volatility scared a lot of the merchant away from using Bitcoin as payment, and 70% of the population there are unbanked. So just think about this. So 70% of the population is unbanked. So that means that they usually use paper cash, and that's still the case. And a lot of merchants, because of network issues and just volatility with Bitcoin, they just prefer cash. So that's interesting. Additionally, El Salvador's Chamber of Commerce released a survey stating that 86% of contacted businesses had never facilitated a payment using Bitcoin. So, and this is just it's not a downer for Bitcoin, but anytime there's some new someone trying something new like Bitcoin, I think it's fantastic. But we also got to understand the friction that's involved, so that we know what works and what isn't working, so that it can be improved upon. Baby steps. So I thought that was really cool. I really want to check it out. I want to go there and check it out. I just hesitant to travel in right now anywhere, but more hesitant to travel in Central America. I do like Belize and those Caribbean islands, though. So that's pretty much covers the news. So let's take a look at the charts. I'll close this up. Hope you liked the Glassnode charts here. Let's see. Make sure I'm where I need to be. Okay. Yeah, we're good. So here we are in the charts here on TradingView. We got this is the daily chart, and let's review what I said yesterday. Yesterday, I said that Bitcoin would more than likely chop to around 40K, and that and then it'll ride this ascending triangle support line, this white dash line here, and it did do that. It chopped up and down, up and down from 40K. It went as high as, let me see here, as high as 41.6K and as low as 39.6K. I think I wrote that somewhere up here. Yeah, I did. So yeah, it went choppy, and you see the bottom wick here. It touched the ascending triangle support line. It did not go below it. So right on target. Bitcoin currently remains below the 50-day moving average with this pink line here, right there. And that pink line is currently at 42K. Bitcoin did climb above the 41K resistance line and has been staying above that for a couple of hours, several hours. So that's good. Remember, on average, Bitcoin can stay below the middle Bollinger basis line for 10 plus days, and is currently on its 8th day. So here's the middle of the Bollinger Band, and here's 1, 2, 3, 4, 5, 6, 7, 8. 8 days. Okay. What else? Bit in this zone right here, you see this red, dark red line, solid red line here that's beneath the pink dash line, and that's the highest volume traded price level for this date range, which goes back to mid of March, March the 15th. So almost about a month. So this is the highest traded volume price level. So it's right there. Let's see what happens. Daily volume, 3 days in a row, it has been above the moving average. So that's good. We get in more volume. So let's dive down into the indicators and see what's happening. The white J line of the KDJ curved up. You can see that here, and it's to 13.7 and almost touched the blue and the red lines. So more than likely, it'll pierce through them in the next handful of hours, or at least within 24 hours, because the slope is pretty sharp. So I don't think it's going to bounce back down. It's going to go up. And I gave that a bull. Down below on the MACD line continues to trend down below the red signal line. However, the white MACD line is leveling off, and it's currently at negative 443 and putting in the 9th consecutive bearish shorter histogram bar here. And although this is bearish, notice how this shade of this bar has a lighter shade. That means that the white MACD line is going to come up and close the gap between itself and the red signal line. It eventually will curve all the way up and penetrate the red line, providing more bullish bars. So this is bearish printing, but bullish trending. Down below, we have RSI, CVD, and MOM, momentum indicator, all trending back up for the second day in a row. And RSI is at 43. 43 just below the middle mark, but it's trending up, so it gets a bull. The blue cumulative volume delta line, this line here, is at 1.814 million, trending up, so it has a bull. The white momentum line is at negative 5,202, and that got a bull too. So if you combine the KDJ, the RSI, the CVD, and the MOM lines, all trending trending up. So even though MACD is still bearish, but bullish trending, it's a very strong indicator that Bitcoin will likely continue to go up, and but more it will continue to chop heavily between the ascending triangle support line and the 50-day moving average, and that is roughly around between 39.6K and 42K. So it'll chop around here, but slightly going up. That's why it's got two crabs and a bull. All right. Let's take a look at some charts. Max pain for the next few periods here. For the 14th, 40K. For the 15th, 42K. 22nd, 42K. And 29th, 42K. So roughly for the rest of this month, it'll be ranging between 40 and 42K. But we want to take a look at some dates where it has high volume and high open interest. Volumes are transactions that have closed already, and open interest are transactions that are still pending. And these are option contracts. So contracts that have been closed and contracts that are still open. So we see here volume for the 14th is like roughly around 500 for calls and puts. For the 15th, it's much higher, almost more than twice as high, 1.5K for both, over that for volume. And 22nd, more puts than calls here, but decent volume. And the 29th is got the highest volume for calls and decent volume for the puts. And the 27th is towards the middle of the range here. But over here, we see that open interest, the 29th is really is decently high, roughly around 20 or above for calls and puts. And that's about it. The 15th, it's okay. It's 14th is not much though. 15th is less than 10K for puts and calls. So days to watch out for, I would say the 29th. But for volume, the 15th and 22nd and 29th. All right, let's take a look at the next chart. Okay, this is the high block liquidation levels and cumulative liquidation levels delta. That's the difference between money in the high leverage shorts minus the high leverage longs. So and the money, not the levels themselves. So you take the money, and that's the difference is here. Notice that it dropped. You see it shrunk. It shrunk to now less than $1 billion. This is on Binance alone, 837 million. That's because Bitcoin price rose up towards this way and liquidated all these high leverage 25 to 100x levels. And I mentioned before, it's a matter of time. And there it is. So there it is, shrinking down. So right now, it's not, at this less than $1 billion. It's nothing to write home about. So it's not going to influence direction of Bitcoin at all. Here is the heat map for Bitcoin. We have sell walls on top, buy walls on the bottom. Let's go through them. 50K is the sell wall up here, not much down below that. And then the buy walls, we have 39, 38, which is bigger, 35, 32, 30, 25, and 20. The biggest one below would be 32 and 30. Notice 38 and 39 is coming in stronger than previous times. Before, we didn't have anything down here. So something to pay attention to. Be prepared whether Bitcoin goes up or down. It's neither here or there. What matters most is how you prepare for the move up and for the move down. All right. Oh, I should go through the entries, not financial advice. This is just simply edutainment. Entry, 40K remains a FOMO level at 5%. However, feel free to move that 5% to 39K and make that 10%. Otherwise, 5% for 39K. 39K would be roughly right around here, right here, just below this this line here. So again, I'll go through them. 40K, 5%, 39K, 5%, 38K, 10%, 35K, 20%, 32K, 30%, 25K, 10%. So notice that 35K and 32K together, they make 50%. And you combine that with 30K, another 25%. That's 75%. That's to help get the bottom. And if it doesn't hit it now, well, you have dry powder for the future. And that's it for this Bitcoin daily analysis. I appreciate your time. Feel free to let me know what you think of this amazing background for Bitcoin. And smash that like, ring my bell, hit subscribe if you haven't, and share your thoughts in the comment section. And share my analysis with your friends and family. Peace. One more video, and that's AVAX. And that's today.